Hello guys, final video of our intermediate trading course. So this video is going to be the final video where we will talk about like how to put every single thing together when it comes to our trading style. So for this video I'll be using ADCHF. Why? Because all of these pairs here, all of these instruments here, sorry, I already have drawings on them, so I won't like to go in and delete all my drawings just for this example. So that's why we'll be using EDCHF. It doesn't really matter the pair you use, everything is still going to be the same. Like the way we analyze the chart is still going to be the same, no matter the instrument, even if it's stocks or crypto. Okay. So this week I've taken quite a few trades and the markets haven't really been that cooperative this week. All right. So yeah, I'm actually in this DE30 euro. This is the tax. I'm actually in this trade, and we drop all the way close to our take profit, which is here, and you can see price pulled back to about 1 hour, and we are still about playing around. So I hope that in the next few hours, price can still start to drop to our targets. So you can see that price reacted from this risky level. So if you have already, I believe that each and every one of you have gone through the trading materials for the advanced trading course, which we use, and you can understand what this level is. That's where price reacted from. But I was expecting it to hit my target here, but I'm already at break even at this point. Also, UCHF, I took a trade on UCHF here, right? But as price dropped, you can see this huge drop initially, and then as price dropped, it started pulling back to entry. So when price started pulling back to the opening price, because it opened and dropped immediately, this is a 4 hour chart. All right, so you open and dropped, and after like 2 hours, it started pulling back all the way to entry. Then I closed the trade at break even here. And you can see it went all the way to where our stop loss was supposed to be. So it does that bullet there just by reading price action and realizing that the bullish momentum is still strong on this. Another trades that I took, which this one Euro AUD, I closed this trade here, right? I closed this trade. I took this trade here, but then I closed here. Why did I close here? Because price, we had this reversal to the upside here on these two candles, and then when this candle came in, price dropped all the way to the entry price there, and then it started to reverse back to the opening price of this candle after this huge drop. So when I saw this happening, I was like, price is really, it's actually going to go for the stop loss, since there is this bullish momentum coming in, that even with this drive, this entire drive to the downside, price still managed to pull back all the way to the opening price. So I just closed that trade for just about more than half of my risk. And you can see it's currently dropping. The only reason why I would be interested in going back into this trade for another sell is if price can close back underneath this entry level, right? So if you get a 4 hour close back underneath that level, then I will place a sell limit there for it to trigger me, and we can potentially see a continuation to the downside. But then this is a 4 hour candle, and we just opened like 2 hour, just 1 hour ago, and this is the initial drop. So I feel that with this initial drop, price could then go back to the entry price and then stop out this particular trade here. And I'm just in on GBP card. So I took this GBP card here because price this level we rejected from this level. And then we have rejected from that level again, and we have a bullish engulf in here. So I expect GBP card to push to the upside. Those are all daily trades I'm currently in at the moment. So now going into what we have for today. which is our top-down analysis and how we approach the market. So we're going to start on the monthly. Remember our trading style, what we look for, where we look for three major things. We look for the Y, which we look for on the monthly. We look for the when, which we look for on the weekly, and then we look for the where, which we look for on the 4 hour. So the where is where we actually take our entry, right? So entry, where are we going to get involved? So here is why, means why are we looking to, why are we looking to go this direction, right? So that's our why, right? So why are we looking to, if you are looking to sell, why are we looking to sell? And then when is, when are we looking to, when are we looking to sell, right? If you are going to be selling, when are we looking to sell? And where is, where are we looking to sell? So once we have all of these once we have all of these options in place, then we have a trade on our hands. Okay, so the why comes from the monthly, the where, the when comes from the weekly, and then the where comes from the 4 hour. It used to be the daily, but then that changed. So for this particular video lesson, we are going to be using one of these monthly candles. So it doesn't matter if we are seeing if the monthly close bullish or bearish, it doesn't really matter. We already have um a template in our mind how we operate, right? So even if I see that this candle close bullish, it doesn't, it's not going to make me say okay, it closed bullish, so that means I'm seeing that this thing, this candle closed bullish, so I'm going to be looking for buys. No, already I know what I look for on the weekly, I know what I look for on the 4 hour, or on the daily, on the, even the monthly. So once I'm seeing that, even if it goes against me, I will still look for what I'm looking for. Okay, so we're going to be taking this monthly as our example. And yes, this monthly close bullish, but then even if this haven't happened, we are going to be still expecting that this monthly is going to close bullish. Why? Because this previous month closed what, strongly bullish, so we are expecting the next month to continue bullish. So if you have paid close attention, or you have watched the first video on our why, you should understand this. So this is just a monthly continuation. Okay, as simple as that. So we expect that monthly continuation into the second month, which is the month of February. We expect a monthly continuation to the upside. Then where do we intend to be careful of, right? So we are looking for a level where if price gets that level, we should then be looking for a potential reversal on the monthly, which is this level. And you can see price reacted from it here. Maybe you will say, okay, I'm drawing the level there because I've already seen price reacting from it. Like I said again, it doesn't matter. I just know which level to draw, and whether it reacts from there or not, it doesn't really matter. So you can see that price actually later broke above that level, right? So I'm taking this level because it's the initial low. We have a support here, we have support here, we have support here, we have support here, and then support has been broken. So if price ever gets back to that as resistance, we do expect a reaction. But then we are not going to be selling at this reaction. Again, all the reasoning behind whether we're going to be selling on this reaction or not is already in the last few videos on this course. So now we know what we are looking for on the monthly, which is bullish continuation. So what do we expect on the weekly? What I'm expecting on the weekly is that if price on the weekly is telling me that it wants to sell, I'm not going to be stubborn and say I want to buy. I'm going to sell. But then I'm going to be looking for an area on the weekly where if price runs into that, we can look to fade that particular price move from being a seller into fading back to the direction that the monthly is going in, which is the bullish momentum. But then if price gives us an option to go bullish on the weekly, then it's going to be in line with the monthly, and we have other options that we can implement, right? And going into the weekly on that month. So this is the first candle of the what, the week or the month. So what I can see here is that we have a few levels here, right? So if you look at this, we have this level of, let me change that to weekly grid, right? So we have this level of resistance, broken, gap down, stayed above it again, gap down, stayed above it, gap rejected from that level. So with what we have on the monthly, we know that we are looking to buy the monthly. So once price is getting into this month, although this weekly here is a no bias week, right? It's a no bias week because it doesn't show us whether we should go long or whether to go short. So that means the momentum trade, bullish momentum trade, is not involved here. So we're looking for a level to go in and start looking for a buy, which is our where, which is our what, when. So when are we looking to start looking for buys on this particular week that we are going into, right? So we are looking for buys when price hits this level. So you can see how that comes in now. Why are we looking to buy? We're looking to buy because the previous month is bullish. So these are why. This is why we are looking to buy into next month, because the previous month is strongly bullish. And then when are we looking to buy as we're going into this week, this trading week, or as we're going into next trading week? We're looking to buy when price hits this level, right? And then since we have those two in place, we now go into the week, into the trading week, and then start looking for where are we going to get involved. Okay, so you can see that the analysis I just did here on the monthly and on the weekly, this just takes about, let's say, maximum 10 minutes if you are going into the details to try to understand where things are happening. But if you're already in tune with it and you fully understand the things that you're looking for on the monthly and the weekly, 5 minutes you are done with this. Okay, so let's say you're doing this analysis on Saturday or on Sunday. 5 minutes you're done with this and you go to another pair. So you can even run through, let's say, 10, 12 pairs within like an hour. So then going into our where are we looking to take the trade, since we have already understood that we are looking to buy. So let me check the daily. We check the daily to see whether we are currently in a range, right? So we ensure that we are not in a range. Why? Because if you are trading within the range, right? So let's say you are buying and we have range high, range low. You should ensure that you are taking a trade, right? If you're looking to buy, ensure that you are taking a trade as the range low. And if you're looking to sell, ensure that you're taking a trade at the range high. You are selling the range high, or you are buying the range low. Don't try to buy the range high or sell the range low, or trade anything in the middle. So that's what I try to confirm on the daily. And then the 4 hour is where we actually do the entries for our trade. So we go to the 4 hour and then look at potential areas where price can give us entries. So the area I'll be interested in is this one, right? So this is support level, right? Where price has pulled away. This is where price bought at this level in the past. So I'm expecting that if price can get back to this level, right, again, we can see price go in for another buy. But then, yeah, it reacted from this level for the buy. But what I'm expecting is for price to for price to close relatively close or into this level if it weaks from afar. Let's say it closes here and then the wicks hits that level and gives me an entry, which is a bullish engulfing. This is a bullish engulfing, although it's too big. This is not a type of trade I would take. This is too big, right? Even if this is a trade that I would take, I won't take it because price close far away from this level. So how do I derive this level? We discussed that in the previous lessons. So check that out as well. And if you have already checked that, gone through all of these lessons, you understand how I derive this level and then the entries that I'm looking for, which is the bullish engulfing or the hammer. All right, so this trade is for me, and this Monday, we broke structure here on Monday. It doesn't really matter to us. We don't do structural. We don't look at structure. We just look at areas that we can trade. And then after this break, price started to pull back because after the break, we are looking for other areas where we can go in for our trade. So what other areas are an option for us to go in for this trade? So we have this high, right? So this high is where price rejected here and then broke. So we are looking for a retest to that level for a continuation. In addition to that, you can see that we had price on the moving average. So price after this expansion to the upside, price reacted from the move. It dropped into the moving average, reacted from it nicely. So that's there is a buy option for us. Okay, so a buy option for us to go higher. But then price didn't continue that bullish momentum. So you can see price attempted to go higher, attempted, and then it failed. So we took a loss here, right? Taking a loss is still okay as long as we are following our trading plan and rules. So with that being said, price dropped below this level. So once price closed below this level on two candles, that confirms that this level is no longer valid for us. So we're now looking for another level where we can engage with price. And the level that stands out is this one. Right, so you can see this level here, which is a level of resistance broken. So we expect for price to come back to use this as was support, and price did just that. So we came back to that as support, and you can see that we had a very beautiful option here of a hammer, right? So that would be our entry, stop loss will be under here, and then our targets, we'll be deriving our targets on daily. So on the daily is where we derive our targets, and the entry came at this area. So where should be our targets on the daily? We are looking for levels on the daily where price has failed in the past, right? So if you look at this daily level here, this daily high, right? So we made that high there on May the 13th, 2025, and here in 2026, price hit that daily, reacted, hit that daily, reacted, and then dropped. After we dropped price, then we caught the entry and price start to run back into that daily. So we expect that if price runs into this daily, this is where we should be taking profits or covering our stops. But then I'll personally take profits at that level, right? Even if it's a 1 hour or a 2 hour. Though I like to have more than 1 hour of my trade, but this is where price is telling us to take profit. So this is a 2 point. So this is a 2.5 hour trade. So we took one loss here, which is 1 hour, right? And then we took a win here. So the loss that we took here, which is a 1 hour loss, I personally would have, when I saw this happening, one, reaction, two, reaction, right? Because we already see price fail here, fail here, fail here again. So when price has failed to break this daily level, I would have moved my stop to break even, right? Because this level is holding strong. What I do expect, if this level is going to break, for price to breakthrough, even if we have this reaction, this one reaction here is okay, but then for it to attempt this secondary break and have this false closure here, this forced closure, this like bulls enter this market up to this point, and then bears came into the market to drive price all the way back down to this opening price, almost this opening price. So this here is an indication that price is proving weak at this level. So we should be taking our profits or protecting ourselves. So this shouldn't even be a loss. So this is going to be a break even, or I'll just close this trade there. So now we are up 2.5. All right. So if I'm taking this trade is 2.47, I'll just make this 2.5 R. Okay. So that's trade number one for the week. And then moving forward into the following week, which is this one. So price on the weekly has already confirmed that yes, we want to continue to do what buy. All right, because this closure here is very strong bullish closure. But then what we should be paying attention to is this particular high. This is a very solid swing high. And if price cannot break above a swing high, right, on the initial reaction, then there is a huge possibility that price will reverse from that level. But then we are bullish on this, so we should be looking to buy if price have not reacted from this. But if price hit this level and fail while also giving us a setup to sell, then we should be selling. So let's see how that plays out. First of all, we check the daily to see if there is something we should be paying attention to, right? So what we should be paying attention to on this price action is we have a bullish engulfing here. This is a bullish engulfing, and then price here closed bearish. So we are looking on this bullish engulfing. We're looking for price to take these highs, and we have a bullish engulfing here, and we also closed bearish on the Monday candle. So what we are expecting is that this bullish engulfing still has something it needs to trade from, right? So we still have an option to trade on this bullish engulfing. Then our entry option for this is going to be the 1 hour high pre-break. So you can we understand this from the discussions on the previous lessons where we talked about the bullish and bearish engulfing on the daily. So what we do is we go to the 4 hour time frame and we use a fib just to measure where are we going to be engaging in this trade, because we don't want to be engaging at any point in price. We want to have an area where we should be engaging, which is anywhere within this fib level. So if we are seeing an entry confirmation within this fib level, that's where we want to engage in this trading. So now we go to the 1 hour time frame just to see where a potential last high pre-break is. Where is our last high pre-break? So the breakout we are looking for is the breakout of this high. So we have a swing structural high that has been broken. So where is the last high prior to break out of this level? And that last high should be within our fib level, right? So anything between this fib level, that's what we are going for. And the last high prior to break is this. So you can see that price didn't even hit that level. Here you have it. We have 5,400 flat, and we have the last high pre-break. So if I'm taking this trade and I'm seeing 5,400, which is a very solid psychological level, because we're looking at, if you're looking at psychological levels, you're looking at 500, 5,450, 5,500, 5,550, 5,600. So I will either place my entry here, right, which is the best thing to do, and then put your stop loss just below the 79%, or you place your entry at 5,400. If 5,400 is not here, then you just place your entry here. So why am I placing in 500? Because price might react immediately from 500, right? But even with 500 being here, I can still I'll still look at this thing and say, okay, this level is where I'm looking to enter, and then we have 500 on top. So I just expect price to hit 500 and go down a little bit into this level. Okay, so you can see that price didn't hit that level, and we ended up immediately it hits that area. It's ended up running all the way to target on the daily, which is a 5 hour. Okay, so let's say we took the trade from 5 400. Let me just put that 500, and then the stop loss will be under here. So that's a 4.78 hour. Okay, just a simple trade there. But whether this is going to be a win for us or a trade that we missed is just going to be based off on personal decision at that point in time where we are taking the trade. So let's go to the 4 hour. So even though we are looking for this particular thing on the 1 hour, right? Because we have seen it on the daily, we still pay attention to the 4 hour to still take our regular H4 trades. Okay. And then if you look at what we have here, there is no level, right? There is no area on the 4 hour to say, okay, let's go in and buy this, because we're looking for areas of support and resistance. And we do not have that here, right? We do not have that here on the 4 hour. So that means we didn't get any 4 hour trades, and then we had price hit TP, and that was it. So the rest of the week, there was literally nothing at all. Literally nothing at all to work with. So would have said, okay, price dropped into the fib here, the moving average here, and then we came out of it, and I was expecting potential push to the upside, right? So a potential continuation to the upside. Yeah, I think this is a trade that I would consider, given that we are looking for that bullish movement. So yes, this is a trade that I would consider to buy. So enter a buy here, stop loss under here, and then targets some areas above, but then we got stopped out here. So now that makes it one win, one missed trade, and then one loss. So still we are bullish on the monthly, and on the weekly here, this is where we are on the weekly, right? So this is where we are on the weekly, and what we can see on the weekly is that price has now indicated to us that it wants to push lower, right? So that's the indication that price is giving to us that it wants to push lower. So on this particular week, I will be looking for potential sell, not buys. So I'll be looking for sell in this week. So let's see how that goes. It's always necessary to check your daily as well to see um where price is giving options for a range. So you are not going to be trading within the range.